Welcome. In this video, Xcn coin falling trend broken. Has the uptrend started? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
A long-standing symbol of downward pressure on the chart, a descending trend line, has finally been left behind with the upward momentum in price action. This trend line had been tested many times in the past, with sellers stepping in every time the price approached this area, halting upward movement and steering the market direction. However, the most recent price action seems to have changed this familiar pattern. The price is now successfully broken above this downtrend line, which had long acted as resistance, and is currently attempting to retest the broken trend line for confirmation. In technical analysis, this is called a retest and is considered a highly important signal for investors. First of all, descending trend lines in technical analysis are not just sloped lines. They are also visual representations of market direction and psychology. These lines show that price has been making lower highs, indicating that buyers are becoming weaker with each rally, and that sellers dominate the market, pushing the trend in a negative direction. However, this structure doesn't last forever. Markets are cyclical, and every downtrend eventually loses strength as buyers begin to gain control again. This transition phase is often marked by a breakout through the trend line. We are currently witnessing exactly this type of scenario. The descending trend line that had suppressed price for a long time has been broken to the upside with a strong bullish move. This breakout carries not only technical but also psychological significance. That's because price, which had been rejected multiple times at this line, has now shown that buyers have gained strength while sellers have weakened. Especially since the breakout occurred with strong volume, the validity of this technical setup is strengthened, suggesting a new uptrend could be starting. However, every technical analyst knows that a trendline breakout alone isn't enough. What really matters is whether the broken line now acts as support. This is where the price returning to the trendline and the market's reaction becomes crucial. This return move is called a retest, a technical formation where the market tests whether the broken resistance has turned into support. If the price manages to stay above the broken trendline during the retest and bounces upwards from there, it's considered a confirmation of trend reversal from a technical perspective. The fact that the price is currently undergoing this retest process makes it a critical moment for investors. A potential upward bounce from this point would be a strong signal for initiating new long positions and could also strengthen the positive sentiment in the market. This movement indicates that the downtrend is over and that the price may be preparing to enter a new uptrend. If the retest is successful and the price starts to rise again, it marks the beginning of a new trend and could trigger a significant wave of buying activity. Moreover, low trading volume during the retest phase, followed by a surge in volume once the price resumes its upward movement, serves as strong evidence of a healthy structure. Strong trends often continue with high volume moves following low volume pullbacks. This supports the classic technical analysis pattern known as pullback after breakout. In other words, first comes the breakout, then a pullback, and finally the trend continues with another strong move. The retest process also tests investor psychology. As price pulls back after the breakout, many investors begin to question whether the breakout was false. This is where patient investors who trust the technical setup see the pullback as a buying opportunity. If the previously broken down trend was in place for a long time, these investors tend to believe the market is entering a new phase and may increase their positions accordingly. In addition, candlestick formations during the retest phase should be closely monitored. Patterns like doji, hammer, engulfing, or piercing line forming near the trend line offer further signals of a potential upward move. These formations indicate market indecision and suggest that one side, usually the buyers, is gaining control. That's why these candlestick patterns are so important in technical analysis. This current pullback or retest movement is not just a short-term test, but also an indicator of how strong the new trend might be. If the price holds at this level and continues upward, this would confirm not just a breakout, but the beginning of a new bullish trend. In that case, investors will begin to view the area that previously acted as resistance as a new support level, and as long as the price stays above it, they'll believe the upward move will continue. In conclusion, a downtrend line that had long capped the market and blocked buyers has finally been broken, and price is now retesting this broken area. This technical structure sends a highly positive signal to market participants. If this retest is successful, meaning the price holds above the trend line, it would confirm both technically and psychologically that a new upward phase is underway. Investors should closely watch this critical technical process, assess the new signals that may arise, and position themselves accordingly to minimize risk and take advantage of new opportunities. But we can't base our decisions solely on trend lines. Let's take a look at the other metrics as well. Stay tuned.
When viewed from a broader perspective, price movements over time appear to have formed a highly symmetrical and balanced structure, one that clearly corresponds to what is known in technical analysis literature as the cup and handle formation. This pattern typically forms when prices reach a certain peak, then gradually pull back, and eventually recover back toward the same levels, creating a broad rounded shape, the cup, followed by a smaller corrective move, the handle. In technical analysis, the cup and handle pattern is considered a highly reliable bullish reversal formation, often used in medium to long-term upward scenarios. In the current technical setup, the cup portion has been completed, and the price is now forming the handle. This handle is typically characterized by a narrow trading range and mild downward corrections. During the handle formation, many investors believe that the price will begin to fall again, but these pullbacks are often limited and followed by an upward breakout that marks the start of the actual rally. This phase offers significant opportunities for patient investors, as once the handle is completed, price usually moves upward swiftly and decisively. The most important characteristic of the cup and handle formation is that the price tests and breaks through the previous peak level. The target price can be projected upward by the distance between the bottom of the cup and its peak. In other words, once the pattern is complete and the handle breaks out, there is potential for a rise equal to the depth of the cup. This targeting method in technical analysis is based on the assumption that past movements will repeat symmetrically. Therefore, the deeper and more well-formed the cup, the higher the reliability of the formation. Right now, the price is in the process of building the handle. This phase often requires patience from investors and is marked by uncertainty, as price tends to move sideways or slightly downward. However, the purpose of this movement is to allow the market to rest and gather momentum before the final breakout. Therefore, the handle phase is essentially a period of consolidation. The breakout that follows this consolidation activates the formation and signals acceleration toward the target. That's why, from a technical standpoint, the completion of the handle is the most critical threshold of the formation. The cup and handle pattern also provides insights into investor behavior. The cup reflects how investors gradually pushed the price down from earlier peaks due to selling pressure, then regained confidence and lifted the price back up. During this phase, buyers gradually gain strength, while sellers start to exit the market. The handle represents minor profit-taking and hesitation before the final breakout. But with a strong breakout, those hesitations vanish and the market steps into a new trend. The relationship between the formation and trading volume is also important. Typically, volume is expected to increase on the right side of the cup as the price recovers. This rising volume indicates that buyers are entering the market and that confidence in the uptrend is strengthening. During the handle phase, volume usually decreases due to market uncertainty and lower trading activity. However, at the point of breakout, volume is expected to rise sharply. This volume surge confirms that the formation is functioning properly and validates the upward move. The price is currently at the edge of this critical phase. The cup formation is complete and the handle is largely taking shape. If the price breaks upward from this handle, the technical target of the formation will be the distance between the cup's lowest point and its peak, projected upward. This target represents the most tangible outcome of the pattern's potential, and the price often moves decisively toward it. That's why patterns like this offer significant opportunities for investors. The cup and handle pattern can also indicate that levels previously acting as resistance have now become support. Especially if after the breakout the price pulls back and holds above the breakout level, it confirms that the area has become strong support. In this case, investors may open new positions or strengthen existing ones using this new support level as a reference. In technical analysis, this is known as a resistance-turned support structure and is seen as a strong sign of a healthy trend continuation. Historically, when the cup and handle pattern plays out successfully, prices often reach their projected targets and even exceed them, forming new highs. This is because the pattern is widely recognized by investors and is also incorporated into many algorithmic trading systems. Therefore, the cup and handle is not just a visual pattern, but also a powerful psychological structure that triggers buying and selling behavior. As a result, successful breakouts from this pattern often attract broader participation and tend to be more sustainable. At the moment, while the price is forming the handle, it's showing a fairly balanced structure. There are neither sharp sell-offs nor sudden buying spikes. This suggests that a wait-and-see approach currently dominates the market. However, a well-known truth in technical analysis is that consolidation periods often precede strong moves. If the price breaks upward from this horizontal structure, it would represent not only a technical breakout, but also a psychological shift. This could result in a price movement equal to the depth of the cup. In conclusion, the current technical outlook clearly reveals a cup and handle formation, with price now consolidating in the handle portion. If this structure breaks to the upside, it would be a positive development from both a technical and a psychological perspective. Considering the target implied by the formation, the price potential appears to be quite strong. For this reason, the pattern should be closely monitored, and any breakout should be viewed as a strong buying opportunity. Analyzing the current technical structure on the chart, the MACD, a strong momentum indicator that traders often turn to, is approaching a critical stage. This indicator, with its two baselines currently converging, strongly suggests the possibility of an upside crossover, which is of great importance in technical analysis. In particular, the narrowing gap between these two lines indicates that momentum is weakening in the negative territory, and that buyers are likely to dominate the market again. This could herald a possible change in direction in the coming days. The MACD measures the difference between two different exponential moving averages, usually of 12 and 26 periods, to understand the speed and direction of the trend. The MACD line resulting from this calculation is usually analyzed together with a 9-period signal line. When the two lines converge, and especially when the MACD line crosses the signal line to the upside, it is called a positive crossover, or bullish crossover in technical analysis. This usually indicates that the price is about to break out of a downtrend or that the uptrend is about to strengthen. In the current situation, the MACD line is getting closer and closer to the signal line. This shows that the short-term momentum is gaining strength compared to the long-term average. This is an important signal that buying pressure is gradually building and selling pressure is fading. For technical analysts, this is quite exciting, because usually such crossovers occur before the price changes direction, giving traders the opportunity to take early positions. A positive crossover is not just a visual crossing of lines. The underlying price behavior and market psychology are also important. Especially in downtrends or sideways movements, an upside crossover of the MACD often indicates that the price is gaining new momentum. This means that traders are regaining confidence, market participants are moving into buy positions, and the market is in a potential turnaround phase. These types of crossovers have been the prelude to major trend reversals many times in the past. The current situation brings such historical similarities to mind. The MACD line is very close to the signal line, and the distance between them is decreasing by the hour. If this converges into a crossover and the MACD line crosses above the signal line and initiates an upside divergence, technically, this would be interpreted as a very strong signal that the market will enter an uptrend. This move is considered positive not only by technical analysts, but also by algorithmic systems and large traders, and often leads to the opening of buy positions. When a crossover occurs, the MACD histogram also provides very meaningful information. The histogram is shaped by whether the difference between the two lines is positive or negative. The length of the histogram bars, which are currently in negative territory, is getting smaller by the day. This shows that the difference is decreasing, meaning that the two lines are getting closer to each other. We should wait for the MACD crossover.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.